Hello, good morning, everyone. So let's have a quick daily briefing for today. And just a quick market recap on yesterday's data. Okay, so first things we have the inflation rate for UK, monthly basis for June. So previous data was 0.6% and forecasted at 0.2%. And for the release time yesterday, 2 p.m. And for the monthly basis, the inflation rate for UK was 0.5%. So it beats the it beats the market forecasted data, but it's slightly lower than the previous one. And also we have the inflation rate for UK as well, yearly basis for the month of June. So previous data was 2.1% and forecasted at 2.2%. And for the yearly basis, the actual data was 2.5%. So it beats the previous and the forecasted data. Also, we have the PPI or the Producer's Price Index for US monthly basis for June. So previous data was 0.8% and forecasted at 0.6%. And for the release time last night, 8:30 p.m. And for the month of June, the PPI for US was 1%. So it beats the previous and the forecasted data as well. And right after the inflation rate and the PPI for US and UK, the pair was actually traded back and forth around the 1.3890 level and below the 1.3840. So right after the release of the inflation rate for UK, the GBP against the dollar goes up for almost 40 pips. And right after the PPI for the US, the data for the US, it went down for 40 pips since the PPI was better comparing on the forecasted than the previous one. So that is why this pair was traded back and forth last night. But for today, the price of the GBP against the dollar is around the 1.3820 on the 30 minutes time frame. So we can see a decline as of this moment. And meanwhile, one of the key data of the calendar last night is the interest rate decision for Canada for the month of July. So previous and forecasted remains the same at 0.25% and release time last night 10 p.m. And for the month of July, the interest rate decision for Canada still remains at 0.25%. And right here, even though I did not put any highlights on the market reaction, it's pretty obvious. But just to be specific, this is what happened on the USD CAD last night. So the dollar benefited from the CAD data. So it means the CAD interest rate decision did not benefit the CAD currency overall. So right here, the BOC left its policy rate unchanged at 0.25% after the July meeting. And right after that, the BOC statement, what they said right here, they reduced the target of weekly net assets in terms of Canadian bonds or the government bonds from 2 billion Canadian dollars from 3 Canadian billion dollars. So for this week, they did not meet their QE or the quantitative easing for $3 billion, but they reduced it for 2 billion Canadian dollars. And right after the CAD data, the USD CAD went up for 95 pips. And if you can still remember, a few months ago, the Canadian government or the Canada government, they've stated that they are confident on how the Canada is doing right now, even though there's a pandemic. But the reason why they've cut their QE for this month is that their concern is the new COVID variants in some parts of the country. And not unlike the US citizens, we're in 80 or 70% of them are fully vaccinated. But for the Canada, uh, it's some parts of the region they're actually the vaccination rates are pretty low, so that is why they've cut the $1 billion of the Canadian bonds, and they want to shift their focus on some vaccine rollouts. So that is why the effect for the CAD was bearish momentum or created the bearish momentum, and some parts of the currencies benefited from this data. And also we have the weekly crude oil inventories. So previous data was negative 6.866 million and forecasted at negative 4.359 M, and a release time last night 10:30 p.m. And for the weekly crude oil inventories, the actual data is negative 7.897 million. Since this one is correlated by the CAD data, so obviously the US oil went down below the 72.80 per barrel. And during the Asian session, the current price of oil was around the 72.30 per barrel. And for today's economic data during the Asian session, we have the employment change for Australia for the month of June. So previous data was 115.2K and forecasted at 30K. And release time earlier, 9:30 a.m. And for the month of June, the employment rate or the employment change for Australia was 29.1K. So lower than the forecasted, and it did not beat the previous data. So right here, as you can see, it's way low on the comparing on the previous data. So the employment rate for the month of June was pretty bad for Australia. And the unemployment rate as well for the month of June for Australia. So previous data was 5.1% and forecasted at 5%. And for the month of June, the unemployment rate was 4.9%. So this one is actually not expected to be much higher comparing on the previous one. So right here, it beats the or slightly lower than the forecasted, but it's actually pretty high. It's like a 0.1% difference for the forecasted, and it beats the previous one. But however, the employment data for the Aussie did not benefit the pair. As you can see here, during the 30 minutes time frame, the pair was actually on the bearish momentum right after the release. Now, why is that? Because a couple of weeks ago, the Australian government, they've had a lockdown as of this moment due to the COVID Delta variant. So they've stated that the lockdown is until July 16, but this Monday they've extended the lockdown until the end of the month. So that is why the Aussie data or the Australian data did not benefit for this move. So keep in mind that until the month of July, the Australia, in some parts of Australia, especially the Sydney, which is the biggest city of the Australia, is still on the lockdown until the end of the month. And aside from that, during the European session, we have to focus on the claimant count change and the unemployment rate for UK later at 2 p.m. And for the US session, we have to focus on the import and export price index and initial jobless claims or the weekly initial jobless claims for US. So both data will be released around 8:30 p.m. And for the key product for today, we have the British pound against the US dollar, since we have data for UK and US later on. Now, for this one, the current price during the Asian session was 1.3828 as of this moment. And a few months ago, or few days ago actually, the British pound against the dollar
Ngâm
traded
rau, ngâm
around
cải đi.
the 1.3810 and a 1.3761 and above the 1.3901 and 1.3941. But right now, obviously, as you can see, the price of the British pound against the dollar is inside the zone around the 1.3810. So if the data for the UK beats the expectations, we might see for this price to rebound around here, around the 1.3810. And if the data did not beat the expectation, so we might see a further downside for this one, and it may go down to 1.3761. But 1.3810 and 1.3761 is, in my opinion, it's actually a pretty good area wherein you can place your buy positions because it created a multiple zone around here. So right here, the possible support is around the 1.3810 and 1.3761, and resistance 1.3901 and the critical zone or resistance is around the 1.3941 respectively. So again, for the European session, we have to focus on the claimant count change or the employment rate, and then employment rate for UK at 2 p.m. And for the US session, we have to focus on the import and export price index and the weekly initial jobless claims for US. Both data will be released at 8:30 p.m. So again, the for today's data, it will be a pretty noise for it will create a noise around the some pairs, especially those pairs that is paired by the GBP against US dollar. So you have to be cautious, and I put a proper risk management as well. All right, so thank you everyone for joining the daily briefing today. Please stay safe and have a great day.